And so just when people start rushing toward gold and silver as a monetary metal to protect their wealth, that's when the supply dries up. At the same time that demand increases, supply goes away. So that's, yeah. Okay. What we've seen as far as gold and silver's price action over the past few months wasn't driven by the United States. But, in Australia, people were lining up at coin shops, and this was happening all over the world. And so there comes a point where the paper game in the United States and in London can't continue overwhelming the physical market.
Silver has risen beyond $48 to levels not seen in almost 10 years, and gold has formally broken above $4,000. Paper markets are struggling to keep up with investors' drive to obtain actual metal from Tokyo to Toronto. One of the most reputable voices in the precious metals industry, Mike Maloney, has now delivered his most critical warning to date. He claims that the current situation is not merely a rally, but rather an ongoing global monetary reset. Maloney claims that as the world loses faith in fiat money, gold and silver are being subtly revalued. Inflation is rising, the dollar's purchasing value is declining, and countries are returning to tangible assets rather than paper promises. We'll go over exactly what Mike Maloney is stating in today's video, as well as the reasons behind this significant change in the metals markets and why the coming weeks might have a significant impact on the financial future of anyone who owns actual gold or silver. If you want more content on precious metals investing, be sure to like, subscribe, and click the bell.
What's going on is that India is setting silver as collateral for bank loans. They're capping the amount of gold that you can pledge as collateral at 1 kilogram and the amount of silver that you could pledge as collateral at 10 kilograms. So that doesn't imply that the value between the two metals is 10 to 1 or that the price should be 10 to 1, nothing like that. It's like if they said you could pledge your house as collateral or up to 3 cars as collateral. That doesn't imply that the exchange rate between houses and cars should be 3 to 1. Not at all. So it's just interesting that the bank is allowing gold and silver to be collateral in the first place. I wouldn't get too hung up on the ratio of 10 to 1.
Yeah, except I do think that that's probably the area that it's destined for, simply because of the shortage of silver as compared to gold. And, we haven't gone into a global recession yet. And when we do, 60% of the, 2/3 of the silver supply is a byproduct of mining metals that are very sensitive to recession risks. And so just when people start rushing toward gold and silver as a monetary metal to protect their wealth, that's when the supply dries up. At the same time that demand increases, supply goes away. So that's, yeah. Okay.
Exactly. Well, we do have a chart of the gold-silver ratio in just a minute.
Yeah. Well, you and I are both going to be at the New Orleans Investment Conference. So people didn't know this until now, but Alan is going to be there as well. So, come on down to the New Orleans Investment Conference and meet us. But look at the caliber of keynotes that they've had in the past. Margaret Thatcher, Steve Forbes, Milton Friedman, Gerald Ford, Norman Schwarzkopf, Ayn Rand, Alan Greenspan. This is an amazing list, and it shows you what a preeminent investment conference that this is. This is like the top of everything out there.
Awesome.
Okay.
So, Mike, you asked me to include the inflation calculator from the BLS because we were talking about silver and its all-time high of 52.50 back in 1980. And it has the same buying power today, according to the government CPI, of about $218. And of course, we're still not there yet. So we're well below the inflation adjusted high. And this just shows us how much more time there likely is in the bull market before we get to those previous highs.
Yeah. Silver is still a bargain, and we're going to show that with the gold-silver ratio. But I also asked you to do the inverse of this to give people an idea of where silver is compared to its previous high in 1980. So let's there we go. So exactly. It's at $12 and is that 61 cents or 80?
61.
Yeah. Okay.
Yeah. So still a long way to go. Still another
long way to go.
Still
right.
another four bagger relative to the dollar, and that's just based on the CPI. Of course, it's probably a lot more than
Yeah.
that to account for real inflation.
Yeah,
So
you've put together a spreadsheet and a calculator that sort of splits the difference between the original CPI and the new CPI. And the truth really does seem to lie somewhere in between. But what was the inflation? I can't remember what the inflation adjusted price was compared to the original, the Shadow Stats CPI. Wasn't it
I
close to
think
$1,000 an ounce?
it might have been 1,999, like basically
Wow.
2,000,
Yeah.
if I remember
2000.
correctly. I'd have to check the
Right.
spreadsheet, but yeah.
Which seems insane, but everybody has to remember these are just this is the way the government used to measure inflation. Those are government numbers that we're using.
Yeah,
So yeah.
exactly.
Gold and silver are responding to decades of monetary excess, finally catching up with reality, not merely to transient market fluctuations. Mike Maloney claims that rising physical demand worldwide is the true impetus behind today's breakout, not Wall Street traders or ETF speculation. Investors are waiting in line outside coin stores in Australia. With a ratio of 10 kilograms of silver to 1 kilogram of gold, the Indian government recently made history by permitting silver to be used as official banking collateral. Maloney's guiding principle has always been straightforward. Gold cannot be printed, but dollars can. Gold does what he refers to as the Great Accounting, a worldwide reset that rebalances actual assets against paper promises. Each time, governments flood the system with new money. The market value of gold has already exceeded $30 trillion, reflecting the surge in the production of fiat money. In the meantime, the gold to silver ratio is far higher than its historical average of roughly 14 to 1 at about 83 to 1. Silver would need to beat gold by around 6 times in order for that ratio to normalize, which means that prices close to $48 may eventually rise into the triple digits. Show some love by hitting the like button, subscribing to the channel, and turning on notifications. Your support means a lot.
So let's take a look at the gold silver ratio. And what I did here, so the gold line is the normal gold silver ratio that everyone's used to. The silver line is basically the price of, instead of 1 ounce of silver, I did 100 ounces of silver. That way we get whole numbers on our scale instead of, 0.05, 0.06, something like that. They're actually whole numbers. So you can see the symmetry here and, the wealth cycle that you've identified, Mike. And it looks like it's going to close at some point. We don't know what day, obviously, but it looks like it's going to invert at some point, and that implies that silver will outperform gold by quite a bit when this reverts.
Yeah, like I said, it takes monetary demand, and we've seen the beginnings of that. But what's interesting is we've seen it pretty much all overseas. What we've seen as far as gold and silver's price action over the past few months wasn't driven by the United States. But in Australia, people were lining up at coin shops, and this was happening all over the world. And so there comes a point where the paper game in the United States and in London can't continue overwhelming the physical market.
Exactly. I have the same chart here presented logarithmically. I don't know if there's anything you want to comment on here, Mike. Otherwise, I have another chart to show.
Well, it just shows this wealth cycle more clearly, and the amount of reversion. And currently, we are at show. What's the next chart?
The next chart is the gold silver ratio in gold. It's the same thing we just saw. However, I've also plotted on the right scale the opportunity size in silver to catch up to gold in order to get back to the all-time high or the all-time low, depending on your perspective. So the all-time high for silver relative to gold was at a gold-silver ratio of 14 to 1. And we're up around 80, 85. I made this chart a few days ago. I think the ratio is about 80. And so that implies that silver would have to outperform gold by 5.7 times in order to catch up. So it doesn't give, quote, a date or a number of years, nothing like that. But eventually it would have to outperform by 5.7x to catch up to the previous gold-silver ratio.
Yeah, well, while we're making this, we're currently at like 85. So I just did the math again, and I come up with 85 divided by 14 is 6.07 times. So more than 6 times is the leverage. But like I said at the beginning of the video, it is a wild ride. So if you're going to climb aboard, make sure you strap in.
That's right. Yeah, wear a seatbelt, guys.
Right.
So yeah, very exciting opportunity for silver. So yes, a tweet from Luke Groman here. The U.S. federal debt has grown 8.5% compounded since 2008. So of course, we did just hit 38 trillion in the national debt, and it's compounded 8.5% per year since 2008. And Rick Rule points out, not coincidentally, gold has increased 9% per year, compounded over an even longer time period. So gold keeping up with the debt.
Yeah, yeah. Well, again, that's was one of the key premises to my first book, was gold doing an accounting of the currency supply, the expansion of it. And this is an example of how well it does it. And it's done this over and over again throughout history. So that was just something that when I got into this and made a commitment to it, these factors that when I discovered that gold had always done this, and it seemed like it would always do it, that's when I just went. And, I used to be, I'd tell people that I was fully diversified, that I own both gold and silver. And really, though, for many, many years, that was my only investment, gold and silver. And everybody thought I was nuts, but it's turned out to be the top performing asset class of this century. So, and I keep on saying there are these rare moments in history where it's not just the safe haven asset, but it's simultaneously the safe haven and the asset that has the single greatest potential gains in purchasing power, the precious metals.
Absolutely.
Yeah.
As he wraps up his talk, Mike Maloney makes a strong point regarding what is actually going on behind the scenes in the global monetary system. He clarifies that the increase in gold is not coincidental, but rather a result of decades of careless money production finally catching up with reality. Gold has always carried out what Maloney refers to as the great accounting, which is the process by which it raises its own price in order to make up for the value lost in paper money. He notes that since 2008, gold has increased by about 9% per year, while the US national debt has increased by 8% annually. To put it another way, gold is keeping a perfect pace with the growth of debt, which is a clear indication that it will continue to be the most reliable indicator of true worth when fiat systems lose their legitimacy. When Maloney first started investing, many thought he was crazy for investing all of his money in gold and silver, he recalls. However, over time, precious metals emerged as the century's top performing asset class. According to him, we are about to enter one of those unique historical periods where gold and silver are both safe havens and the assets with the biggest potential for increases in purchasing power. According to him, they represent a rare combination of opportunity and protection. Additionally, he cautions investors against believing paper promises, particularly those made by commodity exchanges. There is no assurance that someone will ever receive the actual metal, even if they purchase gold futures 6 years in advance. Exchange regulations are subject to change at any time, and they frequently require cash settlements rather than the delivery of actual gold. Thanks for watching. If you like this video, give it a thumbs up, subscribe, and turn on post notifications so you never miss an update.